watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everyone. Welcome. It's Wednesday, and Dan and I are here, of course, on schedule. Today we're going to be talking about trader checklists, something new that we haven't done in a prior MT Live. And Dan came up with the idea based on questions as to how do you do this. And Dan is the, I don't know why, Dan. Oh, maybe because the microphone is way down. I had moved it out of my way. Maybe that's better. And so again, we get lots of questions every day. And so, focusing on teaching as well as trading as to what is a setup and so on, having a checklist. I know Dan has referred to this at times as because he's a pilot, as a pilot's checklist. You do this, you do that, you do this, check, 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 check. Okay, ignite, press the accelerator, so on and so forth. So we're going to go over some of the things that we teach in courses and we talk about in the chat room every day as to a checklist. And so from that, you can develop your own. You probably use some of these as well. So let's do it, Dan.
All right, awesome, thank you. And Greg, you always give great introductions, but I have to say that today you actually undersold, in my opinion, the power of what we're going to cover today, because we're going to get into what is trading. We aren't fundamentals. We're buying these pictures. Okay, we're buying the pictures. Tell me more. Well, that's what we're going to do today. So, I use the word unconscious competence. That's where everybody wants to get to, which is we don't need the checklist. Why? Because we can look at a chart in a half a second. We know it's a compelling setup, but we got to start slower. And so particularly for, we get all types of traders that come to Master Trader beginning to decades of experience. But today is going to reinforce the process of what trading is. It's going to make you objectively think about things. We're going to show you a post-market analysis. We're going to show you how to make a trading plan. We're going to walk through an example of these checklists where you can say, look, here's check, 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 check. You put on the trade and you manage in between. So let's begin. We have a lot of great stuff to cover. This is our approach at Master Trader. Some people might look at the lunar arrangement. They might look at, there's many ways to skin the cat. Fibonacci, fundamental analysis. This is ours. We have incredible success in trading and investing. And these are the concepts that we put together that make up our method. And so our checklist and what we're going to cover today is going to keep drilling back to these concepts to make sure whether our trade opportunity is a high probability one. And if you can put your drop down, all panelists and attendees, so everybody can see the questions. So step one, no pattern, no trade. We're trading pictures. Pictures of where supply and demand suggest a high probability, a bias of future stock movement. The reason technical analysis works is because it reflects where people are putting their money. It's the sum total reflection of all market participants. And it's painting a picture on the time frame that you're trading. That's what we're trading. So I remember Greg had a seminar a while back, and remember, Greg, we got that picture of the whale. The whale is swimming in the ocean. I'm not a whaleologist. I don't know where the whale.
Where did you get that word, Dan?
I just made it up. I don't know where what the whale does and why, but our approach will tell you with a high degree of probability where we think that whale is going to go. And then all we're doing is hopping on that whale for a ride in the time frame that you're trading. All right, so trend, of course. So these pictures that we're going to show you, where are those pictures? Is the trend up, down, or sideways? What about support and resistance, multiple time frame alignment, relative strength or weakness, retracement, bar by bar? Let's continue. These are the only possible movements that a stock can do. Yes, I can go up, down, or sideways. That's the starting point. Uptrend, what is an uptrend? Higher highs, higher lows. What's a downtrend? Lower highs, lower lows. That's very objective. Sideways trend, relatively equal highs and lows. So, okay, those are my three trends, but trends don't last forever. Correct. Correct. So what are the possibility of trend changes? Here they are down here. So if Greg and I can teach you whatever you're trading, and on whatever time frame, you could be trading Bitcoin, you could be trading these EV stocks, you could be trading Facebook. If we can teach you how to identify these 7 stock market steps, and then we give you the tools to trade these events, then that's an objective approach to trading and investing anything that moves that can be charted. And, you know, Greg, I don't know if you want to elaborate anything about your course. You know, I know your course is these thought building concepts that help you understand price action and patterns.
Well, let's get into the other slides. These are, you know, basic stuff and the foundation. It's all good.
Okay, so when we, again, are looking at something, this is one of our concepts. Where is this setup occurring? Is it occurring in an uptrend, downtrend, sideways trend? Is it occurring on minor support? And these are the definitions. So in an uptrend, I told you a moment ago, higher pivot highs, higher pivot lows. A pivot just means that it has higher highs and higher lows to the left of this low point. So the low point is, it could not go 1 penny lower. And that's what forms the major support once it takes out the prior high. So in an uptrend, we teach you how to look for pictures of buying reversals on this minor support. What was minor resistance turns into minor support on the first turn. Once it makes a new high, then that minor support turns into major support. The reverse on downtrends, sideways trends, we're looking to bearish stock and option trades when we get a reversal at resistance, and the opposite on support. This is one of my favorite slides. Greg put this together a while ago. Every single one of these are bullish patterns. I'm not showing you the symbol. These are just little candlesticks we put together. I'm not showing you the time frame. I'm not showing you the trend. I'm not showing you support or resistance. But this is the starting point, folks. You need to have, and we're going to get in the trading plan, what your bullish and bearish pictures look like, and then on what time frame, and those other concepts, and that's what's going to make up your trading plan. But our job as a trader now, step one, remember on our first slide, step one, compelling pattern. Well, these are compelling patterns right here. So every one on this chart satisfies step one. So Greg, I asked you this in the green room to, you know, to help with the psychology component of it's harder. Well, how do I phrase this? In your opinion, of decades of teaching, you know, I learned from you decades ago, and for me, I just see a picture and I don't have a mental block of buying or shorting something. We had a discussion this morning in the green room about, oh, don't ever short Tesla, don't ever short these the electric vehicle stocks, this and that. And I'm like, why? If I see a picture and it meets my concept, I'm going to hit the button. So
I think that's more because they're just going up now. So why would you short them? But at some point when they turn down, then you'll short them.
right. Okay, so you just want to drill into people. They want to buy things, but they might hear something on the news. It might be fundamental. It might be somebody says, "Oh, they pay a good dividend." I mean, all that is noise to me, unless it has a compelling picture. So that's step one.
Dan, just thought when you're saying people want to buy things, I thought you were going to go into, people want to buy things after they've been going up for a while. And it kind of gave me the thought, well, two thoughts. For some reason, people approach the stock market in a different way than they would approach probably most other things in life. And meaning we see almost every day, someone will say, hey, you know what do you think about buying XYZ? And we'll say, hey, you know what? The thing just doubled in the last week and a half. But they're still willing to buy because, the greed factor of, okay, I think it's going to do more. Whereas if I said to you, hey, you know what? I just bought this mouse here and I paid, $50 for it, and someone else sold it to me yesterday. They was $25, and I say, you know what? I want $200 for it, and you tell me, go take a walk. But in the stock market, people are like, yeah, you know what? It was $10 yesterday, and now it's $40, and I'll pay $40 for it. So people approach things differently, and sometimes I guess because it works, but because we look at things from a technical point of view, and if we see something that's up, 8 bars in a row and it's doubled in price in a short amount of time, we're going to say no. But people just have to, resign themselves to sometimes passing on things. And I guess that's part of the checklist thing is say, hey, you know what, if something, has gone up so much in a short amount of time, unless possibly a picture like this happens or like this happens, I'm not going to do anything. And sometimes,
right, I say another bus will be by. It's not my setup. So yeah, another graphic I use on these pictures is, and all the concepts combined. You hear me saying it's not my wheelhouse. It's not my pitch. I'm going to wait for my setup, or I don't engage. It's that simple. All right, so creating a checklist. I'm going to show you an example of that. But despite years of education, pilots here, they have tens of thousands of hours of experience, and they go through a checklist, the pre-flight checklist. I mean, their lives are in danger there, whereas our financial, and mental stability is on the line when you do something stupid in the market, so you're not going to die. But until you get to that unconscious competence, have a little checklist right next to you to your trading station. You don't have to be in a rush unless you're trading a 2-minute chart, which you shouldn't be doing unless you've mastered the bigger ones. So here's an example now of a checklist for trading stocks, ETFs, Bitcoin, commodity, anything. Step one, you're going to see these concepts again that we started with on the first page. Do I have a high probability setup with volume on the time frame being traded? I should have underlined that. So step one, do I have one of those pictures? So when somebody asks me in the green room, hey, Dan, what do you think of XYZ? It's like, I got to keep coming back to this every single time. What time frame are you trading? I can't give you an opinion on Facebook unless you're telling me what time frame you're looking at. I have no opinion for you. And secondly, many times I tell, hopefully they've been trained by us, so we just recognize what the pattern is. But many times I'll say, well, what's the pattern? It doesn't meet step one of those bullish money pictures. I don't know what it is. So it's a veto right there. And then when I asked them that question, I said, hey, what pattern is that Greg taught you in his swing trading course? And they say, nothing. Then we say, well, why are you looking at it then? So that's that. Is the setup in a quality trend? Is it near support? Is it extended? Multiple time frame alignment. We say the pattern has to come from the time frame you're trading, and don't fade the bias of the bigger one, which can be in a different trend, but we're just saying, don't fade it, because then what I like to say is you're swimming upstream, so to speak, if you're fighting the bias of the longer one.
So Dan, to clarify that, because I'm sure there are people here that are saying, well, what does that really mean
Okay.
in the chart? And they say, well, what if I had, a sell set up on the weekly time frame, meaning it's in a downtrend, it's at resistance, it's got a topping tail, and going to go down, and it starts to go down, and now the smaller time frame, the daily, because it's fewer bars, right? Within a week, you could have the beginning of a turning point on the weekly time frame, which is just maybe 1 bar, a bar and a half. It's the middle of the week, and on the daily time frame, you've got a buy setup where it's been down several days in a row, and it would have been in an uptrend because maybe the weekly has gone up for several weeks, and reversed down, and now you've got this turning point. So what that is saying is, do not take that buy setup. Rather, wait for confirmation to see if the buy setup fails. So, which leads to the question, well, what's a buy setup? Which could simply be it was going up for a number of days and it pulled back, say 4 days, and you got a green bar. And that reversal was said it's going to go up. Well, the slide Dan had showed before, bullish setups.
Right here.
Right. So if you had the opposite and we said, well, here it was going down go back to it, Dan. And it was going down for a few days, right? Say down. I'm trying to draw straight lines. And I don't know if I can change this. And now we got a green bar. But meanwhile, the big picture is saying, hey, this thing's ready to go down. And the little picture says going up. Well, what we're doing, see this here? We'll take the opposite of that and say, well, if this now fails where it triggers, getting a little advanced here, but we would take that as a short setup. But you would not take this as a long setup because it's an opposition of your higher time frame. All covered in the course in great detail, but just wanted to clarify that because you're giving a lot of information on these slides, Dan, that someone will say, well, what does certain things mean? And we could talk for 2 hours probably on all of this.
Exactly. All right. Market internals, whether you're day trading or swing trading, that's part of my checklist. Am I fighting that? Like now, the market internals have given us a bearish swing trading signal. So any longs that we take, we know that we got to be more cautious on that because they're not in alignment. Any pending news, FOMC, earnings, making it higher risk. We're going to show you how to calculate position size, and then you manage in between. I got a slide on that. For you day traders, these are what we call intraday reversal periods. And I have an example of a late day breakdown that happened right here at the 231. And these happen just because of the natural time of the market, and you have buyers and sellers at the open, and then at the close, funds don't have positions closed. You have people positioning for overnight positions. So the 3 o'clock one and 3:30 are very reliable. And the market was very bullish yesterday and had a beautiful breakout at 2:30. And because of the bearish market internals, as Greg's saying, breadth and sentiment, we said, you know what, folks, in the green room, we're not buying into this unless you're just scalping. Let's wait for the 3 or 330 reversal. And then yesterday afternoon had a nice little swan dive. So I'm going to show you this same slide here, Jemiah. This was a trade we took yesterday, and we're going to use it as our little case study to illustrate some of these points that we're covering. So here's the first point. We've gone over the master trader concept. We've gone over our checklist, and this was a late day breakdown. Let's talk about it. Do you want to, Greg? I've been doing a lot of talking.
Well, I mean, you called it yesterday, so I mean, you
Well,
pointed it out, the trade, and so you can explain it.
And so well, I'll get to the daily here in a moment, but this is a good example of we aren't fighting the bias. So 15-minute chart, bobbling around here. This was yesterday, had a small gap up, wide range igniting bar. I actually could have pointed to this one too. This is what we call, remember my slide of pictures? This is a bearish 1, 2, 3 continuation. That was a beautiful short right there. The sector's been overbought. This is in the electric vehicle. Things have gone vertical like this. Stabilized here in the morning, went into a tight consolidation. This is one of our pictures called a late day breakdown. It's down on the day. It's basing for a couple hours into the declining 20, and at 2:30 or after, you short a breakdown and you go through the rest of your checklist. Am I fighting the bias of the larger time frame, the daily? No. These things are retracing after climactic sell setups, so that's a plus. Price void, plus. Relative weakness, a plus. Look at the spiders here. This was at lunchtime breakout. This is 2:30, where I told you a moment ago, we weren't buying into that for overnight exposure, had a breakout failure. So this stock is weaker than the broader market, and we shorted this with a breakout failure here. This was
it couldn't go up. So, the extension on this, where we say it kind of got short-term extended. It had broken down, but during this time, it's 12 o'clock, market had a little rally, and look at what happened here when it tried to rally.
Yep.
It formed a topping tail. So the fact that it got a little extended to the downside and it went sideways for all of that time shows an inability. Somebody was buying it, obviously, or it would have kept going down. But when it tried to go up, it couldn't. And that's what we call, the green bar being ignored. And so at this time, where it reaches a point in the time of day where things typically begin to get shaped up and, wherever they're going to go into the close, and it started to break down, and it's just incredibly tight, that little tiny bar there. It's just interesting. I didn't notice it yesterday, Dan, when you mentioned it, how tiny that bar was, but the range has gotten so tight, is like, this thing has to move. And so looking at the fact that it couldn't go up and the relative weakness, it just made sense that it should go down.
Yeah. So, okay, Greg, take it away.
Well, this is, basic stuff, a starting point for money management. For most, it's a wake-up call, or just a light bulb moment, because most have no concept of money management when it comes to the stock market. And, Dan, you might remember, like 2-3 weeks ago, I said in the chat room, I said, would everyone agree that if you went into business, money management and a plan would be the most important thing? And everyone said, yes, the most important thing. And I said, do you realize that money management is the least concept focused on when it comes to trading? And more advanced money management, which the majority of people have no concept of whatsoever, So, this is a starting point, and, the math here just works out easily to say, if you had $100,000 account, let's have a plan as to what's my maximum risk per day. What am I willing to lose? And part of that is to say, look, no matter what happens, I'm going to be in the game tomorrow and next week, next month, next year, because I could have a bad day. And well, if I lose, and I'm just made up a number here, we're saying 1.2%. You could say you'd lose 0.5% on a day. You make up your own rules. But if I lose $1,200, that's it. I go into paper trading mode if I want to, or go play golf or whatever. Now I want to break that up. I could say, you know what, I'm going to do one trade, max lost $1,200. I'm going to share size it accordingly. How this says, I'm going to up it, right, for one trade. And rather than doing, if I got 50-cent risk rather than 600 shares, I'm going to just quadruple that. Or you could say, look, one bad trade, no big deal. I got 3 other shots at it. So we're going to max loss per day. We're going to go for 4 trades, $300 risk per trade. And then wherever our stop is, we're going to share size accordingly. Right? And most would say, share size? No, I'm just going to do 1,000 shares each one, or 2,000 or whatever, Well, the stop's $2 away on this swing trade. Are you willing to lose $2,000?
And
Hell no.
Well, just to highlight, the stop is dictated by the pattern, right?
Right. So, we look at that pattern and say, this is where prices shouldn't go. And okay, that's where our stop loss is going to be because the trade's not working. And so now we share size accordingly. Look, we sat through this Hubert for the last few days. Now, we didn't share size that accordingly. You'd have been out of that thing probably yesterday, and especially this morning. Wow. And now it's all the way back up to the high of the day.
And our stock held.
And Tilray and what have you. And surprisingly, I see IBM came all the way back. But if you don't share size accordingly, you're not going to sit through the plan. So it's of utmost importance to understand money management and position management. And that AMS that was on the bottom there, that's a course that goes into, starts with the basics and then teaches you how to advance money management, adding to positions at the proper time and so on. It's an amazing course. And Dan will show you the specials later, but you can get this course for free if you get one of the others. Let's continue, Dan.
So same slide here, just going through the math. I've used different numbers. Assuming you have $30,000, 1%, 300. I'm entering 2907. My stop is over the red bar. And here's the math, 909 shares. Enter, manage in between. I have a slide on that coming up on this subject. So we've gone through the checklist now. We have the setup, trend, we've gone everything. Now we're in management mode. So many people, they don't have an objective method of trade management. So here's our buy setup that we talked about. So assume there's support to the left, uptrend, nice rise in 20 and 50. This is our textbook entry. What these rules say is, we're only going to trail under a prior bar's low if prices accelerate and get extended. Otherwise, if Greg likes to say, well, this acceleration here, is it near its destination, or does it still have more room to run based on our analysis of the pattern on multiple timeframes? If it does, you have to let it retrace against you and pivot if you want to hold on for the bigger gains. And all of these things on trade management in your trading plan should describe this. For example, and this is kind of the way I personally do it, this is money, right? That you nailed the entry and it's up 5 bars. I'm trailing at least half. And if I say, yeah, okay, I made $3, but my target is 7, you let it retrace, you let it pivot. And in Greg's course, this is an example of where he would teach you how to add at this pullback. And then you let it pivot, and we're going to be trailing pivots until it gets 80% of the way to the target or accelerates even more, like these electric vehicles have been doing. If something goes vertical, I'm not going to let it retrace against me, because as you know, we can look at some of these EVs, they've retraced 40% already in a couple of days. Same slide. Let's talk about trade management. So we entered here, and at 2:30, 15-minute chart, we do the math. We only have 6 bars till the day closes, and this is a day trade. We were in this, you know, talking about it yesterday. Let me tell you exactly what I told people. I said it's not near its destination. It looks weak. It looks great, so on and so forth. I said just trail a prior bar's high, and just sit back, put your feet on the table, and let the stock tell you when it wants to get out. I have a question here. Okay, how do you use the 5-minute to maximize profits? This is exactly what I told folks in the green room. So this is now 3 p.m. So you had a beautiful, beautiful gain in 30 minutes. I said, let's drop down to a smaller time frame and let it pivot. That's my pivot. So a pivot now is lower highs on the pivot high, lower highs on the left, lower highs on the right. So once you have 3 lower highs on the right, that's my new pivot. So we still have half. And I said, look, now you're getting into the end of the day. Just go ahead and trail now a 5-minute bars high, because the day's closing. And you can see that got you out the back half, you know, right there, pretty darn near the low of the day. Now, checklist for, we have a weekly options trader. So we also love selling options on patterns, where we're just calling, predicting a short-term top or bottom. And you're going to see it's not too different, but let's go through it. Same high probability setup. At Master Trader, we trade options, both directionally, which means buying options and selling them. But regardless, everything starts with this. That's the same. Most options are not liquid. There's really only like 125 of them or so that have really tight spreads, high open interest. That's next on my checklist. It better be liquid or I don't want to hear about it. If we're selling options, is the money that is being deposited into my account for putting on this trade at whatever strike I'm selling, how many days of risk do I have? Is it worth it? That's on my checklist. Is there any pending news? Same question as the other one. We don't hold over earnings unless it's a long-term trade and there's nothing you can do about it. Calculate your position size for the option, and then same, just manage in between with the charts. I just grabbed these 3 this morning because these are all in the electric vehicle market. He said, and we were trading them on the long side, and now we were trading them on the short side, but not shorting the stock as a swing trade. But Greg's course teaches you how these were all compelling short-term climactic patterns. So every single one of these trades for our 2 advisory letters here, we were shorting out of the money calls. In this one, JMIA, so the stock was trading, we put this on November 30th on the gap down day. So the stock was trading at, let's just call it 33 bucks. We said, we're going to sell a $50 call with a stop over the high. So we have our stop in place. And then this morning, I said, look, bid a dime. So we closed out of these this morning because all 3 of these in the sector gapped down pretty good. We closed this one, XPEV, at 2 cents. We sold it for $1.55 a share. So the profit is $1.48 a share, or I'm sorry, $1.53. Pelletier, same. We covered that. All right. In your trading plan now, you're going to talk about post-market review. Why do we do this? You want to mark up charts to see if you followed your plan. Did you do the right thing and the market just took you out on a whipsaw and you did nothing wrong? And if so, that's part of trading life. You did nothing wrong. But you can always sit there and ask yourself, what could I have done differently? So did you do something stupid? Duh, and it'll jump right at you. Take a screenshot. Microsoft has a OneNote, and take notes as if you were the instructor grading somebody else's trade. But you're going to be grading that trade based on your trading plan, your rules. There's a word again that I like to use, that this is, Greg always says, hey, if whatever trade you want to do, doctor, lawyer, engineer, whatever, you go to school. What do you do after you go to school?
Practice.
Get experience. And so you take Greg's course, Swing Trading, or my option courses. I call that, you have the conscious competence. The materials in the book is, if you understand it and go over it over and over again, which is why we have online courses, you have lifetime access to them. You're consciously competent if you follow the rules. That point forward is seasoning. It's getting experience. Yeah, Greg said, I'm a private pilot. I only have a couple hundred hours. So I don't have the seasoning of a pilot who has 40,000 hours.
Dan, one of the things that, how do you get that experience, which you said, which you can relate to a guy throwing a basketball to foul shots. Right. You might sit at that line every day shooting 200 baskets for the next 6 months.
Well, looked at the Tiger Woods.
And now he's got, 80% rate of doing it. Now, a lot of people believe if they paper trade for the next 6 months or a year or 2 years, that they're going to get that. You won't. You will not. Because paper trading should only be utilized to get familiar with your trading software. Okay, know the red button from the green button and how to take stops and so on. You become familiar with that. And yes, I can recognize that pattern, but it will not ensure that you will do the right thing in the moment. And by putting some small amount of money into the trades, that will build your confidence. Paper trading is like fake confidence. Oh, you work the simulator, and you think, okay, in real life now, when if you're a pilot, the wind shakes things and, are you going to hold the plane straight or are you going to turn it upside down and crash? Well, you got to do it for real. And trading for real means real money, small amounts.
Yep. All right, so here's a subscriber of ours emailed this to me to review. And I said, wow, you did a great job. And I'm going to put this in our lesson here. So this was Spiders, the intraday trade, broke down, right? It was in a sideways trend and it broke down. This was a little sell setup and he shorted under these tails right here. It's in a downtrend. See the 20 MA rolled, the 50 rolled. And then wide range igniting. So I want you also to keep a recollection of this slide. Pivots for exit. he's now in the trade. He had a good setup, so that was perfect. Remember typing one comment to him. I said, look, this was a bearish engulfing. You could have shorted under this red bar and then added here where his arrow is. He actually bought puts here. He took our directional options course, and day trading, the spiders are a fantastic instrument to use, using options because they're so liquid. So now he's in trade management mode. We got lower pivot highs. Remember the rule I said about if it accelerates lower now and getting close to its destination, it's a judgment call. I would have to look at multiple time frames, but I said I definitely would have got out of half down here, if not all. I would look at the time of the day. I would see what the broader market was doing. Did you get a tick extreme? Those were all relevant factors. Then it bounced, and he said he was implying that he was going to still let it pivot, and hopefully it went lower. So these are the biggest two green bars after a big fall with a bullish 1, 2, 3 continuation. So that exit for the back half was perfect. I would have done the same. So look at his question. Was my thinking correct? Was there any flaw? And then, I typed up the things that we're talking about right now. But if you do this yourself to your own trades, it'll jump out at you. Like for example, Greg, I guarantee you, will everybody ask yourself this question? So here's our wide range igniting bar. I guarantee you that on these two green bar bounces, Greg, because you know darn well, there would be people who didn't trust their trading plan and trade methodology to say, oh no, I'm bailing here because it's gonna wipe out all my gains.
Yeah.
But this was just a retracement, 50% retracement into an ugly breakdown bar. There was no reason to get concerned on that bounce right there.
Well, if you didn't use the proper money management, meaning, you put on too large of a position, that would be a real concern because, now it starts playing with your head. And that's why money management is so important.
Yeah, Howard's, you got to do all panelists and attendees, but, and somebody emailed me and this exact question, I guess it was you, Howard, and I answered. I had an email that said, hey, Dan, this is a bullish hammer right here. Why the heck is this a bearish pattern? Greg, since you love candlestick names, do you want to take that one of why that is not a bullish hammer?
Because, and someone in YouTube is asking me, what about all the bottoming tail bars, which is probably referring to here. And so the answer is that this big topping pattern is to say this is bigger than that, and it's certainly much more meaningful than this. So this big picture says it should keep going down. And so anything that's in a downtrend, right, lower highs and lower lows, and you get in on a retracement, makes the assumption that it's going to, keep breaking these lows. And you just wait to see what happens until it reaches something of significance. One thing he left off was, to look to the left. Why did that stop going down there?
Right. I said multiple.
Could have been 3 o'clock reversal period. Maybe the market bottomed. Well, this is the market, right? The spiders. Right. But it could have been something to the left there. Even, the Qs could have hit support and that reversed. Could have been a tick extreme. Lots of different things going on that we could cover additionally here.
Right. So just to finish, Howard, you can't just look at a Steve Nissan book and who puts a name on all these things and say, oh, that's a bullish or bearish path, bar.
Names are meaningless.
They're meaningless because we teach you what this bar means, the message of that bar in connection with the overall pattern. So yes, it is a bottoming tail bar, but it's not a bullish one. It's a consolidation one in something that already broke down.
You know, Dan, just to, we always like to make things real. And look, we've been in trades. You could look at something like this, like, you go to any webinar and, 99% of the time you're going to be shown what worked. Great, of course. Well, I could honestly tell you that I've been in trades that look like this, and I see that, and I'm like, no big deal. The freaking thing does that. I mean, this market is one in which it's news driven, and sometimes that happens, and it's not the norm. You're going to experience it, move on. But wherever your stop is going to be, that's your money management, and you're not going to experience some devastating loss.
Yep. All right, perfect timing. We always like looking at the live markets also and answering some of your questions, but this is our end of year special, the best prices of the year. We've got 4 categories, kind of grouping in what you're interested in, but I urge you to go check it out. That's Spanish. Greg, are you posting the link right now? And check it out. I mean, we've been at this for decades. We teach you the like I said, the conscious competence, which starts with a course. We could tell stories. People come to us sometimes and say, oh, well, I need to make some money so I can then pay for the course. That is the cart before the horse. You need to have an approach that you can then go through the checklist, as we said, have a high probability setup, and get the seasoning. That's how to professionally approach anything that you want to master.
The common comment is, as soon as I make some money in the market, I'll buy the course.
Right. All right. That's yeah, and actually, there's a couple bullish ones here that maybe we can use as an example. Lyft is on here. I want to keep an eye on Oki. Win is breaking out today.
This is one that I got to learn on this. I think you just stepped away before MT Live, Dan, with this triggered. We're going to see where this ends up today, but I liked it. I had an alert above this high. Actually, I said it last night. I was thinking, oh, it's getting close to support. It might trigger above that high. So this is one down uptrend. Let's see if it can keep the turn going.
All right.
Yeah.
Got it. So Lyft is one on our list.
Yeah. Yep. Lyft. Got a big day going on here. And it's got room to run. Tomorrow might be a consolidation day. Wouldn't be a surprise, but if you get into this today, your stop is down here. Go to the money management screen, the slide that we showed, share size it, whatever the size of that bar is. Looks pretty big. How much you want to risk.
Right. Right. You can print the checklist, and, Greg and I are just looking at this and saying, it's done. It meets the checklist. Other than, or the broader markets and market internals, that's a slight caveat that we already talked about.
Well, it's got a problem, Dave, clearly. And it's got a breakout that failed. It's still in an uptrend. And, I referred to this as it needs to repair the damage. I don't know why it gapped down today. Maybe because of the market did. Other things that gapped down came back pretty strongly. So it's questionable. Big green bar clearing the highs, and now it's underneath it. So you have to see what happens. What is on the right? Oh, this? Oh, this is just part of the platform. You can pick horizontal lines. I don't know what any of this garbage is here, but you can, just draw a line. or, draw a box. Just little tools. X. That looks pretty interesting. It's kind of messy. I would question its underperformance, relative weakness, but wide range bar, inside bar, bottoming tail bar. It could start moving up above that high, sure. Debit spread, Dan? Put
we
spread.
already have one open.
There you go.
Credit spread, not debit.
Yeah.
Yeah, we have one for Friday, the 480s. So show them that. Explain credit spread if you want.
Yeah, credit spread. Sell something more expensive and buy something cheaper.
Right, under support. And so the 480s should hold. That's $23 away for Friday.
Right. I don't know about this one, Daniel. It's kind of messy, consolidating. It's in an uptrend, so this could just be building a new support area. Just out of curiosity, I'm going to set an alert above this little topping tail bar, and if it got back up there, I think it'll be interesting. PLTR.
That was one of our bear call spreads.
Yeah, this is going to take time.
Right.
Got too extended. It's got to rebuild here.
Well, he was down on today. Was asking for short, actually.
I wouldn't short. I mean, intraday you could possibly short it. As it starts to roll over. Yeah, could do that. That looks great. Sure.
Wow, shutter stuff.
Volume there. Let's set an alert. Like new all-time highs? Oh, no, not quite. Not that how meaningful is this is a few years away, but I suppose that it will become something that others will look at. It shouldn't stop it. It should not stop it. So see what if it can clear here. It's got a nice bullish consolidation.
I like lift better.
Here's a 1, 2, 3.
Yep.
Yeah.
1, 2, 3. I mean, we prefer an amount of consolidation, but
that looks good. Guys are finding good stuff. I'm setting alerts. Euro. I have to get the symbol. S. A. Yeah, this is one someone was asking me about this morning. It looks like it should go higher. We always prefer these continuation patterns to consolidate under here, but it's gotten a little sloppy. See what it does in the afternoon or tomorrow. See if it continues, but it's got a monster base there. So I would think it's going to go higher. NIO. It's a bio, Dan? No. Well, that's one of your electric car companies?
Yeah.
Yeah. Yeah. They bought the big gap down this morning. I don't know. This probably needs more work, just consolidating the big gain. All right, leave it alone for a little while. Go to the weekly chart. Yeah, a little extended. Maybe it comes down lower and eventually you get a buy setup. I'm still in it, Sam. Maybe that spike. Just
Yeah, Apple looks good.
see this? And look at the hourly, Sam. It's starting. All right? So we'll see that little spike there. That's usually death. It's an exaggeration, but you know, that little spike and reversal. We'll see what happens. There's a lot of NASDAQ stocks that look really good here today, whether it was Lyft, there's Uber, Piton, a lot of them. And if they can hold on to their gains, all of these patterns like Apple say they should go higher tomorrow. All right. So, you know, I want to wait until after 2 o'clock to see if they actually hold up here. And if they do,
After 3 for me.
well, yeah, I'm just saying, but if they hold by 2 with this kind of a move, odds are they'll hold by 3, but we'll see.
Right.
We'll see. Root. That looks terrible.
Yeah, I said if it can't bounce, short it after 3.
It's a little extended to the downside, so yeah, maybe later in the day. Geez, new issue and just down, down, down.
Yeah, how do those IPO people feel?
GM looking pretty good.
Yeah, it's kind of been an electric play also recently.
Yeah. But yeah, nice uptrend. The gap it's holding here. You're going to have some resistance to deal with over there, but like a lot of stuff, we'll see how they hold up here in the afternoon. CRM. Trouble. Earnings.
No,
I don't know.
bought a company, bought work.
Oh, that'll do it. So look, you never know, but you know, you normally think some company like this, it's huge company. It's a terrible pattern as far as this consolidation and then a breakdown underneath it. But this company is going to be around a long time. It's a monster company, and leave it alone for now and see what it does. You know, weekly chart looks like it has to go lower, maybe at $200. You know, maybe if you like the idea of owning this,
Right.
selling a $200 put,
Right.
you know, and wait and see. You know, you got the 200-day right there as well. So a couple more, guys, and we're going to call it. I don't like this, you know. I mean, I like today's bar. I just don't like the breakout failure here, the new high failure, and then the breakdown. And it's just messy. You know, it just would be my preference to own something or buy something like this that looks so much better and higher probability of going higher than CAH. Breakout on what, Dave? I don't know. If a breakout fails, it fails. I'm not sure which stock you're talking about. This is pulling back, you know, uptrend. It'll pull back and you look for the next buy setup. It's messy, you know, came back in hard, but it might all be part of a consolidation. You know, it could have been the victim of the market today. You know, the market was gapping under support and it came back. And this is forming a bottoming tail bar. Sometimes, you know, great looking patterns, you know, people just hit the sell button on a weak market day, and it was a weak morning to start. And now things have come back, and we'll see what happens here as the day progresses. That's why we wait until after 2 and sometimes 3 o'clock. to see, does it really hold on to the gain? Because sometimes the best looking days, at the end of the day, it's like, what the heck happened?
Right.
So that's it, everybody. I hope you enjoyed. And I guess we'll be back next week, right, Dan?
Absolutely.
Absolutely. With a new episode of MT Live. And take a look at our specials. And any questions, email us. Dan at Master Trader and Greg at Master Trader. And we'll talk next week. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.